Today in crypto. Major cryptocurrency exchange Coinbase has acquired the Routefire platform for enhanced trade execution. In a January 7 blog post, Routefire CEO Jason Victor announced that the team would now be developing its execution services for Coinbase, while thanking users for their support over the last 3 years. Continue reading on Cointelegraph. EOS was trading at $3,5121 by 7:53, 12:53 GMT, on the investing.com index on Saturday, up 10.45% on the day. It was the largest one-day percentage gain since January 9. The move upwards pushed EOS's market cap up to $3,1887 or 0.29% of the total cryptocurrency market cap. At its highest, EOS's market cap was $17,5290. EOS had traded in a range of $3,0140 to $3,5121 in the previous 24 hours. Over the past 7 days, EOS has seen a rise in value, as it gained 19%. The volume of EOS traded in the 24 hours to time of writing was $4,5132 or 2.91% of the total volume of all cryptocurrencies. It has traded in a range of $2,5784 to $3,5121 in the past 7 days. At its current price, EOS is still down 84.72% from its all-time high of $22.98 set on April 29, 2018. Elsewhere in cryptocurrency trading, Bitcoin was last at $40,759.10 on the investing.com index, down 1.30% on the day. Ethereum was trading at $1,220.95 on the investing.com index, a loss of 2.33%. Bitcoin's market cap was last at $755.9798 or 69.84% of the total cryptocurrency market cap, while Ethereum's market cap totaled $139.2822 or 12.87% of the total cryptocurrency market value. Think how well Bitcoin would be doing if you could actually buy it. Bailey Reutzel on the frustrations many newbie investors must be facing right now. The price of XRP is showing bullish signs in the short term despite the ongoing SEC lawsuit against Ripple. XRP holders are still struggling around the $0.30 area while the majority of the cryptocurrency markets are euphoric with Bitcoin, BTC, price surpassing $40,000. BTC price is currently over 100% higher than the previous all-time high in 2017, while XRP's price is still down more than 90% from the all-time high in 2017. A lawsuit from the SEC against Ripple is certainly not bullish and is the primary reason for this overall weakness, as this is prompting some exchanges to delist. However, the chart might give some potential bullish outlook for the short-term period if XRP's price breaks several crucial resistance levels. The XRP chart shows a very odd price pattern, as XRP's price flipped the $0.21 area for support beautifully in 2020. This support/resistance flip caused a breakout above the significant resistance zone at $0.32 to $0.35. This breakout led to a run toward the $0.80 region, one of the most significant surges of XRP in recent years. However, fundamentals kicked in as the SEC unveiled a lawsuit against Ripple, causing the price of XRP to tumble down into the range. Now, the structure itself is destroyed and looks quite odd to chart on. Regardless of that bizarre move, crucial and beneficial levels can still be determined from here. The critical level to hold for the bulls is the range low at $0.21 to $0.23, which once again provided a support in recent weeks. Yes, the candles dipped below $0.21 to $0.23. However, the candle closes were above, indicating that support was found for XRP. Traders often zoom into lower time frames to spot critical levels. Based on the higher time frames, critical levels are defined at $0.21 to $0.23 and $0.32 to $0.35 as support and resistance zones. However, the 1-hour chart shows another critical level. This level is the $0.28 to $0.295 zone. marked in gray on the chart. As long as that sustained support, multiple tests of resistances could occur. As the saying goes, the more often a resistance gets tested, the weaker it becomes. Therefore, a breakout toward $0.50 is in play. On the other hand, if the $0.28 to $0.295 loses support, the next support area is the higher time frame support between $0.21 to $0.23. This area is also the range low throughout 2019 and 2020 and could usher in a more extended accumulation period for XRP. The XRP/BTC pair looks disgusting as it has been making new lower lows since the peak high in January 2018. Hence, there are no arguments to be found for taking any position in XRP. However, there are some arguments to look for a potential reversal. One of them is the heavy increase in XRP trading volume recently, indicating that traders are accumulating the cryptocurrency. This one could turn into a bull cycle once more if XR price flips the previous support levels at 0.00015550, 0.000250, 0.000235 odds for support. The final argument is to watch for a potential bullish divergence on the daily, 3-day, or weekly time frames. Once that starts to happen, a reversal could be near for XRP. However, until then, it's still in a very precarious situation with a bearish outlook. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision. Bitcoin whales are selling while buyers in the US are accumulating. Who will get the upper hand, and where will BTC's price go next? The price of Bitcoin, BTC, achieved a new all-time high above $42,000 on January 8, surging by 9% in merely 3 hours. At the time, there was a high premium on Coinbase, which meant US buyers drove up the market by aggressively accumulating BTC. But there is continuous selling pressure coming from Asia, particularly from South Korea. Bitcoin corrected sharply after rising to $42,000, declining by over 7% in about 8 hours. The sell-off coincided with significant whale activity across major exchanges. Trading activity in the altcoin futures market also demonstrated a similar trend. For instance, on January 9, a whale unloaded a big portion of Ether, ETH, longs on Bitfinex, taking profit for the first time since March 12. Whales have been selling en masse since the start of 2021. As an example, when Bitcoin first surpassed $40,000, large whales began to sell BTC even as the price fell below $40,000. Within 3 hours, on January 7, so-called mega whales on Binance sold off a total of 4 times, driving extreme volatility. Currently, the Bitcoin market is essentially seeing a battle between whales taking profit on their positions and new buyers in the US market accumulating BTC. As such, there has been consistent extreme volatility ever since Bitcoin surpassed $30,000. Due to the high inflow of capital into Bitcoin through Coinbase, the upside momentum of BTC would likely be sustained in the foreseeable future. The key metrics to observe are Bitcoin outflows from Coinbase and stablecoin inflows into major exchanges. When high net worth investors purchase Bitcoin, they prefer to move the BTC out of centralized exchanges for security purposes. Hence, high Coinbase outflows would mean a heavy accumulation of BTC in the United States. When stablecoin inflows are high, it suggests that sidelined capital is moving back into the Bitcoin market rather than cashing out to fiat currencies, such as the US dollar. Traders within the cryptocurrency exchange market, particularly derivatives traders, park their funds in stablecoins. Therefore, if capital stored in stablecoins begins to move back into cryptocurrencies, it typically suggests a bullish market structure. Generally, the market sentiment around Bitcoin remains positive despite an upsurge throughout the past 3 months. Eric Wall, Chief Investment Officer of Arcane Research, said in a tweet that Bitcoin has the potential to see a very extreme peak this time around. This would mean that even if Bitcoin could be overheated based on technical indicators in the near term, BTC could still have room for additional growth. At the current price of around $40,000, The market capitalization of Bitcoin is valued at over $740 billion. Given gold's valuation of $9 trillion, this would put BTC's market cap at around 8.2% of gold. Bullish projections of Bitcoin. Like the thesis of the Winklevoss twins, I anticipate Bitcoin to overtake gold over the long term. Based on this assessment, some analysts say that Bitcoin reaching 10% to 20% of gold's market cap is realistic. Wall noted that Bitcoin would likely peak when there is ostensibly a lot of froth in the market. If there is an unnaturally high level of retail excitement around Bitcoin, the probability of a temporary Bitcoin top would increase. However, Wall said that given the unprecedented level of institutional interest in Bitcoin, the next top could be much higher than many imagine. According to researchers at WhaleMap, a data and analytics platform that tracks Bitcoin whales or high net worth investors, there are two key technical levels for Bitcoin in the near term. As long as BTC remains above $38,719 and $38,700, which are two major whale cluster areas, the researchers said that the bull trend of BTC remains intact. Whale clusters form when whales accumulate Bitcoin at a certain price point and do not move their holdings afterward. Clusters are theoretically ideal support areas because whales would look to accumulate more at levels they previously bought BTC at if the price of Bitcoin dips. The researchers noted, support at $39,719. Invalidation below $38,700. Gap in supports between $39,719 and $32,180, so consolidating in the bear zone could bring us down to $32,000. On January 9, Bitcoin's price fell to as low as $38,700, recovering strongly at the support level. This indicates that some whales are accumulating at this level, protecting it as a short-term support area to keep the BTC rally moving. However, Routefire, CEO of Real Vision Group, warned of the New Year head fake. Powell said that hedge funds begin to talk about various risk-on assets at the beginning of the year. Then, when many investors buy in, the market tends to correct by the end of the first quarter. If this head fake phenomenon coincides with a rising US dollar, Powell said that he would be tempted to place S&P 500 puts in the options market. Puts are short contracts that allow investors to bet against an asset or an index. Considering that Bitcoin and gold tend to move together, and a rising dollar could negatively affect both assets, a New Year head fake could cause corrections in both the Bitcoin and the gold markets. Whether this correction would be as brutal as the March crash remains uncertain, but given that BTC is overbought on higher time frames, like the weekly and monthly charts, the possibility of a deep correction exists nonetheless. Hit the like button and subscribe to the channel.